You ever see people driving those really fancy cars and you're like, that person's a business owner, and I wonder what kind of write-off are they getting? Or is the government actually paying for their entire vehicle? Like, is that how it works? Reality is the IRS tax code is complicated and a lot of people aren't sure. I mean, even take this beautiful i8. This has been a really, really, really fun car to drive. I've really enjoyed it. But currently I've got my sights set on a Lamborghini Aventador. I'm also looking at this crazy 6x6 Jeep. It looks like a freaking tank. And my question to my CPA was, which of these two vehicles is going to give me a better tax write-off? In other words, how much of these cars for business purposes can I get the government to actually pay for? And today I'm gonna answer that question and help you understand what kind of tax write-offs you can get on whatever car you're driving.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Hey, have you ever seen someone pull up in a really nice car and think to yourself, man, what does that car cost? But as a business owner, guess what I'm thinking? How much is the government gonna chip in for this vehicle? Did you know that in some situations, the government will actually write off up to 100% of the cost of a vehicle? In today's video, I'm gonna share with you two cars that I'm looking at getting. One is the Lamborghini Aventador, and another one is like this tank of a truck. And guess what? The tax benefits are wildly different for these two vehicles, and today I'm gonna break it all down. Oh man, today we are gonna talk about this question. Can I get a free car from the government? Well, I don't really think anything's for free without strings attached, but I'll tell you what, depending on the vehicle that you pick, the government's tax benefits look quite different. Most people are really confused what that even means, and today, because I'm looking at these two beautiful beasts of cars, I'm gonna break it all down and help you understand how it works if I were to get the Lamborghini Aventador or if I were gonna get this custom 6x6 truck. First of all, just so that we're all clear with each other, when you own a business in this country, you are entitled not to 1 or 2 tax benefits or 10. There are 250 different types of write-offs and deductions that go everywhere from travel, depreciation, dining, interest expenses, employee deductions, home offices, entertainment, and yes, vehicles. And yet, why would I make this video today? Because I've spent way too much time on the phone with my tax team basically saying, hey, how come the write-offs are so different for these two different vehicles? Because I was gonna pick one, I was gonna pick the other, I was thinking maybe I'd get both, but man, the tax write-offs are so different. And that's because of this. The IRS tax code, it is freaking complicated. You know, when Harry Potter was written, all those books, it came to over 1 million words. Did you know that that's fewer words than the actual United States tax code has? The 2012 edition has 1.2 almost million words. It's crazy. And guess what? You think that the government may not care so much which vehicle you drive for tax write-offs? Oh, they care. So last year during COVID, I decided to do a mastermind trip up with a team of mine to Vegas, and I got a chance to hit the racetrack, and I got to drive this beautiful, like Batman looking, all Kevlar black Lamborghini. The Aventador, I had literally out of our entire group, the fastest race time. And part of that was, yes, I had a good instructor, but man, it's because that vehicle 0 to 60 is crazy.
All the way to the orange down there. Shift up. Good.
On the other hand, I sometimes get tired of driving a sports car and I feel like I want something like manly, something meaty, something that can go crazy off-road, something that can handle itself. And on Jay Leno's Garage, I got introduced to the Apocalypse. It's this 6-wheeled, crazy, individual articulating 40-inch tired tank that you can pretty much take anywhere in the world. And this thing is mean, especially if you drop a Hellcat engine into it. And it's like, man, what should I do? Should I go with the sexy, sleek Lamborghini? Should I go with the 6x6? And more importantly, how much is the government gonna kick in? Now listen up, I am not a tax advisor, so what I'm gonna do is I'm gonna present some information and help you understand some principles. And the first one is just this idea of a write-off or a deduction. Just so we're really clear, when you own a business and you buy something and you're using it for the sake of the business, the government allows you to depreciate it and over time write it off. Like, I got this laptop right here. And let's just assume for a moment that this is a $2,000 laptop. And let's just say that hypothetically, I exclusively only use this for business. Well, the government says, listen, if you're gonna buy and use this for the business, then we're gonna allow you to actually write this thing off. And they might say, we're gonna allow you to write it off over, let's call it 5 years, because they're basically saying in 5 years, this thing probably is not going to work super well. So what's $2,000 divided by 5 years? And it basically comes out to $400 a year. And let's just say that your income was $50,000 a year. Well, the government would say, hey, before you claim $50,000 of income this year and for each of the next 5 years, you can subtract that income by $400 because we're allowing you to deduct the equipment that you bought for your business. Well, a car works very, very similarly. It's just a lot bigger and has more zeros attached. Today, I'm going to talk about 3 different ways that the government allows you to write off vehicles because the 2 cars that I'm considering are treated very differently. And to kick it off, I want to explain the first method. There's a special section in the complicated code of the IRS called Section 179, and here's what it basically says. Section 179 of the U.S. Internal Revenue Code is an immediate expense deduction on equipment that business owners can take for purchases of depreciable business equipment instead of capitalizing and depreciating the assets over a period of time. Blah, 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 blah. What does that basically mean? It means that that laptop needs to be written off over 5 years. But under Section 179, there's an allocation for certain types of equipment, even vehicles, where you don't have to write it off over 5 years or 7 years or 10 years. You can write it 100% off in just the first year. For example, Section 179 historically has been used to allow companies to write off like big heavy equipment, like farming equipment. But in recent years, they decided to add a clause that said that if you had a vehicle that weighed at least 6,000 pounds, that you could also write that off as a business expense, as long as it meant all the specific criteria, which I'm about to share with you, one of the crazy little loopholes in just a minute here. But that big truck of a tank of a vehicle, that custom 6x6 that I'm looking at, guess what that just happens to be? Over 6,000 pounds. Do you remember a few years back when it seemed like everyone was driving those Hummers, those H2 and H3 Hummers around? You're like, what is going on? Did this car just get popular overnight?
These 22s, I don't want you grinding them.
Well, no, it turns out that this is one of the very few SUVs or trucks that basically qualify as what you would call a 6,000 pound vehicle. And once that was added to Section 179, if you were a business owner and if you were paying too much in taxes and you could use or leverage a really nice big heavy vehicle, guess what people went out and did? They went and bought really big heavy vehicles. For just a moment, if you are a subscriber to my channel, it means that I'm awakening the financial genius within you and I'm helping you make more money. And what that does is that can create first world problems like this. What happens when you're at a maximum federal tax bracket of, let's just call it 37%. Let's say that you live in my state where you have 5% on top of that. Federal 37 plus 5% state, that's 42%. For just a moment, let's take a look at what would happen if I wanted to buy that big crazy tank of a vehicle and I'm in a situation where otherwise I'm going to be giving 42% of my money to the government if I can't find something legitimate to spend it on. All right, check it out. I'm over here at the factory and this is the vehicle that I'm checking out right now. This is made by, this is the brand Apocalypse. It really is nothing more than a Jeep Gladiator at the start, but that's not how it's going to end. You see, they strip it all the way down and then they add here the extra axle so that this becomes a 6-wheeler. It's a beautiful beast. But the reason why I'm here is not only is this now qualifying as a 6,000 pound vehicle, but check this out. That bed has to be extended to 7 feet. As long as it's over 6 feet 1 inches, it's actually also going to qualify for the tax situation where the government says this now qualifies as a 100% write-off. Now think about that for a moment. If this is a $200,000 Jeep, for example, the government kicking in, let's call it 40%, somewhere around that in that top tax bracket, that's an $80,000 contribution that they're making on a vehicle like this. One of the upgrades that I'm considering is a Hellcat engine, over 700 horsepower. And what's the torque on that?
About 650.
650 on the torque. So you can imagine your 0 to 60, your front end is going to be fast. Check this bad boy out. This just got installed on Bitcoin Rob's. Bitcoin Rodney's ride that's getting tricked out. That's why he's going with this crazy orange and purple, but look at that. Hellcat sits super nice in there and ready to freaking rev up and go. You want to hear it? Do it again. Oh my God. Well, I called him up this morning and I made a decision on whether I'm going to buy this vehicle or not. I'll tell you at the end of the video, but this is the way the real math really works out. If, for example, I'm in a 40%-ish tax bracket, and let's just say that the total vehicle cost is $225,000, I'm talking about $90,000 that I'm going to have to give the government anyway. And if I actually really want this vehicle, guess what? That's $90,000 that I can put into the vehicle instead of giving it to the government. And yet the situation looks, for some crazy reason, vastly different than if we're talking about my Lamborghini Aventador. Check this out. This beautiful beast of a vehicle, which I wouldn't get red. I would have to do, I don't know what it is about black right now, but that's satin black. It just looks so beautiful. With this kind of vehicle, the government tax code operates in a very different way. And I told you in this video that I was going to share 3 different ways that the government looks at vehicles. And the first one is if it's a big, heavy 6,000 pound beast of a truck or SUV, then I gave you the criteria there and it has to be at least 6,000 pounds. What happens when it's not? Well, it turns out that there are 2 ways for me to buy this vehicle. I can either buy it and have payments if I'm not going to pay it off, or I can lease it. And guess what? The government tax situation is very, very different depending on which of those 2 choices you make. So check this out. Small vehicles that weigh under 6,000 pounds have a Section 179 deduction limit of $10,100 in the first year that they're used. And that would be $18,100 with a bonus depreciation year. We're not going to get into that level of tax code. Needless to say, in typical times in the first year, I'm not writing off 100% of the vehicle. I'm limited to what? $10,000? Not $225,000? Why is it so different?
So many differences, this is gonna be hard.
Needless to say, on these expensive exotics, that your depreciation is massively limited. And with every year, it gets less and less and less. In fact, it doesn't even hold a candle to that 6,000 pound vehicle deduction. If you take leasing, for example, which means I'm gonna get the car for a period of time, I'm gonna make payments on it, but then after 2 or 3 or 4 years, I have to give the vehicle back. The government says that with that kind of expense, you can actually write off 100% of that. So the sports car that I've been driving right out there, I've actually been expensing the majority of that for what I use for business because it's a lease, and that is 100% write-offable, which is totally different than if I'm actually choosing to purchase the car. Only problem is these are really nice specialized vehicles and I don't want to lease them. I think that when someone buys a Lamborghini, you get that thing fully customized. This 6x6 truck, I literally have every part of that literally built from the ground up exactly the way I want. I don't want to lease that. It's something that I want to own. It's something that I want to hang on to. In that case, with lease, I have to give it up. So it creates a little bit of this problem for people that like to buy these really expensive toys, because if you lease, you can write 100% off. But if you want to keep it, then you actually get to depreciate very little of the vehicle. Now listen, I'm not a tax expert like I said, but I do know there's a couple things that you should consider. Number 1, you must track your mileage to show how much you're actually using for business and how much of the vehicle you're actually using for personal use. And thing number 2, you can only write off the percentage of the car that you use for business. So you gotta have it tracked, and at the end of the day, you've gotta claim that, because it's not like you get to write 100% of it off unless you're genuinely using 100% of it for business. Frankly, I have no idea what today's video is inspiring within you, except for hopefully one thing. You should have a business, and it should be a good, profitable business. And I'm telling you right now that if you don't have something on the side that has the potential to replace your income, if that's your goal, if you're not doing something that's making you an extra $5,000 or $10,000 a month on the side, then you need that. And by the way, guess what I specialize in? A lot of you are subscribed here because you think it's the game of real estate and how to invest and how to buy properties. But you know what? I've made way more money in business than I even have in real estate, which is why I'm always on the lookout for businesses that are proven and simple, that can literally be side hustles, and replace my income or just make a whole lot of supplementary income. And right now, if you don't have one of those, I want you to click the link below, and I'm actually gonna open you up to a whole new world of proven, simple, stupid, almost inexpensive free businesses that you can run on the side that can make you a ton of money. Literally, my buddy this last month cleared over $50,000, and he's got a full-time job. Like, that's pretty crazy. Click the link below. Let me show you what business he's working on and what you should look at if you want the kind of deductions and write-offs and ability to get vehicles like this. You know, the more money you make, the more you got to understand taxes and the way they work. And for that matter, have you heard the news on the street? They're actually looking at doubling capital gains tax. That means that when you invest in something and hold it for a year or more and it goes up in value, government wants to become a silent partner who does double the taxation of what they were previously doing. If you don't know what that means or what that looks like, you got to get yourself educated, subscribe to my channel, and for sure click on this video and let me tell you what's up. Well, and of course, you could go with pretty much tank mode, right? I mean, that's what they call this Hellfire version, where you get this amazing slope down after they do the 7-foot extension on the bed, and it has that roll down feature right there. You got to admit, it's pretty crazy.